Evolution Consulting market updates as they've come to be known. This one being recorded the 16th of August 2016, and about 11 o'clock, so during trading hours certainly. And you might wonder, oh, here he goes again with the rapid fire videos, one right after the other. Guys, I had no intentions of doing this one, apart from the fact that today is a glaring example of what we mean by metals manipulation and metals repression. Okay, we often talk about spot price manipulation and metals repression, and the BRICS nations and the Anglo-Western nations and the difference in banking philosophy. That's all macro level stuff, and it makes for very exciting reading. We do realize that. What we are discussing is very true and very correct macroeconomic concepts, but when you see one of those macroeconomic concepts manifest and just be illustrated at the microeconomic level, i.e. spot price of metals, okay, we got, we're going to do a video, we're going to say something. In terms of today, okay, we're going to put the chart up in the edit, probably more than once, but you often see us, especially if you follow us on Twitter, okay, you'll see us make reference to the Shang Hai Gold Exchange, the SGE, hashtag SGE, okay, and we often comically refer to them in the city of London post-Brexit as Team Button Masher. Okay, now again, that's a video gaming term, okay? What we mean by Team Button Masher is that every time you see obvious attempts at repression of the spot valuation of metals, okay, we kind of joke around, we said somewhere out there in an unknown location is the SGE's primary trading desk, and all they do is this on their keyboard as fast as they can to push the spot pricing of metals back up, with the intention, obviously, of ultimately long-term goal backing their currency, the Chinese yuan, okay, possibly the Russian ruble, amongst the other BRICS nations' currencies by way of the AIIB, with gold, a hard asset-backed currency, okay. So the City of London and the Shanghai Gold Exchange, they're going to do what they want, okay? And the other side of that equation is the U.S. Federal Reserve and the COMEX system, which obviously is doing all that they can desperately and obviously to maintain lower metal spot prices in the interest of saving the dollar, the euro dollar, and some other currencies that are out there. Now, I just had a very interesting conversation with somebody about how the yen fits into that whole equation, and that was a real eye-opener, okay? So it's inspired us to do a lot more research in terms of the yen, which if you look at a yen chart last night, it was like, okay? With that being said, though, you take a look at the spot valuation of metal. Now, let's use our brain for a second here. I'm kind of going to try to look out of the corner of my eye and do this. I mean, up until about 8 o'clock, 9 o'clock in the morning, we saw gold at about 13.55. Okay, pretty steady ramp up. Weakening U.S. dollar, all fundamental economic catalysts working according to plan, right? Or I should say working according to, at the very least, the fundamental economic principles of, okay, if the fiat is worth less, the metals or the hedge should be worth more. All right. And then about 8 o'clock rolls around, it looks like about 8:30, and yeah, that happens. We should have the chart up in the edit here. That happens. Okay, so what in the hell happened between about 8:15 and about 9:30? Did the demand for metals suddenly decline by that much? No. Did any fundamental economic metric that should have any kind of bearing on the spot price of gold change between 8:30 and about 9:30? Answer. Nine. Yet. No. All right. So what happened? Okay. That is what we mean. You often hear us say that, oh, here we go. The COMEX and the Fed are going to unload, naked shorts on the market or in the spot price market, or oh boy, here we go. The ECB is going to start unloading naked shorts, and when we say naked shorts, we just mean uncovered options. That means just expressing almost a faux negative interest in gold. Okay, which means increasing the appearance that there's less confidence in gold, when we all know damn well that it's all coming down anyway. All right, and I know that sounds like a very tinfoil hat kind of thing. Oh, the system's coming crashing down, but there is a reordering of economics going on, guys. And like it or not, put the glasses on, okay? Deal with it, as we so often say. The reality of the situation, guys, is that the new currency system, global unified currency, is going to be metals backed. And if you don't like that, Too bad. Anyway, but that chart right there illustrates what we mean about obvious metals manipulation and obvious so-called, and I think the phrase they use on Twitter is metals smackdowns. That's exactly what we mean by that. And you can see that recovery. We did this video around 11:15 it is right now. Okay. We'll see what the rest of that chart looks like. But we have a funny suspicion it's going to be right back up over 1350 real soon. Okay. And the reason we say that is that's the Shanghai Gold Exchange response. Okay. They see that and they go, oh, hell no. All right. They need gold to be at certain levels at certain times. They are carefully planning what they're doing. I guarantee you that. Okay. So we've said 1365 is a staging level for a move of gold towards 1400. Okay, and we can get into the who, what, when, where, and why of that, and the transference of wealth, et cetera, et cetera. Okay, but we're not going to do that right now. We are going to speak about it from a spot price perspective and also a metals ETF perspective. Okay, when we say a metals ETF perspective, okay, you take a look at, and I usually don't do this, but I'm going to do it real time here. I'm going to take a look at JNUG, which as an example, theoretically. All right, and we look at JNUG, it's fairly flat. We're talking $2, just the 308 level. Okay. Point of the story though, that's one of those. That's a play there where even the metals ETFs at this point are kind of going, what the hell was that? Okay. So again, those are buying opportunities. When you see the SGE come in and support metal like that, where they just come under and they just go, oh, nope. There's that spite effect there because it really is. It's a geopolitical power play, is what it is. Okay, so when you see that spike support right there, where it just goes, nope, stop right there, and up we go the other way. Okay, when you see that, that's a buying opportunity. I'm specifically speaking to intraday traders. Okay, if you got other stuff to do throughout the day, or you kind of take a more hands-off approach, this might be a little less relevant. Other than the fact that if you check your account and you go, whoa, what the hell happened? Intraday traders or 2, 3, 4, 5 swing and extended swing traders, 2, 3, 4, 5 day extended swing, swing traders. When you see those metals ETFs sitting flat like that, and you see the spot price starting to come back up and recover, fairly obvious. All right, especially on the leverage stuff. Hop back in, ride another wave higher. Okay, it's not always that obvious. I mean, like I said, again, you take a look at a spot price gold chart, it's just wow. Okay. But again, guys, even from a macro, slightly more hands-off investment approach, that's exactly what we mean about the geopolitical kind of little conflict going on with gold and the spot price of metals. And so, for those of you who read that our Grant Street Notes metals guide, okay, that's what we mean by the weaponization of spot pricing. That's what we mean by the weaponization of commodities. So I know this is only a quick, short video, guys, but I did have to say something because it's just, like I said, that the spot price of gold chart really just tells the whole damn story today as to what's going on. So that being said, guys, happy trading. Keep making money, keep prospering, keep doing your thing. And again, you notice we're not complaining about this. I mean, it's one thing to come on here and just go, oh, the metals markets are manipulated, boo-hoo, and oh, the stock market's manipulated by big meanie heads, boo-hoo. I give a shit. It's going to go up or it's going to go down, and I can still make money with it. End of story. Okay? That said, again, study that chart, take a look at it. All right? If you think the macro stuff we're making up is just exciting reading, it is very exciting reading, but we're not making it up. All right? That's, again, that spot price chart today being just a glaring example of what we're talking about. So thank you, Anglo-Western banking system, and thank you, Shanghai Gold Exchange, for really proving our point today. Again, guys, as always, questions, somewhere over there. Email graphic, info@evolutionconsulting.world, info@evolutionconsulting.world, and of course, if you want to follow us, today's going to be a fun day. I can tell you already on Twitter. So @evo_consultants, @evo_consultants. Follow along there. Again, thank you to everybody for the kind words. I don't know what happened, man, but all of a sudden, it's like I think everybody started to figure out that, holy crap, they really do know what they're doing with that Evolution program, and the support that we've been seeing, and the approval, and the thumbs up, and the accolades, and the cheering for Evolution. I mean, it's gotten, we've seen a lot of great feedback. We've gotten some really awesome emails, And it seems like it's a compounding effect. So, guys, that does mean a lot, okay? Because I do have my moments. I'm not going to lie, where I just kind of go, why the hell do I even bother doing this? Why do I share the information publicly? And every so often we get, and it's happening more and more frequently now. We get our 10% people that are out there and they're going, keep doing what you're doing. Hell yeah. It's nice to have a voice of reason or a solid intellectual middle ground voice. So thank you again, guys, for that. As always, be good. Everything really is a transaction.